President Trump announced a trade deal with Britain. Big deal. We saw it yesterday. Economist Peter Morici joins us now. All right, Peter, we know that you are not a fan of tariffs. We got that. But what did you make of the US-UK deal?
Oh, it's certainly something I can live with. I wish he had accomplished more. He got us some additional market access on beef and, some technical things like on government procurement. They addressed a lot of non-tariff barriers. The net effect, though, is that probably the tariffs on steel and aluminum with regard to Britain will go away and we'll roll back to where we were before April 1. With regard to autos, he's going to allow their existing flow of cars into the United States to continue at 10%. Anything above 100,000, which is about the existing level, would be subject to the 25. They weren't likely to go up anyway. But one of the things that hit me in reviewing the deal and reviewing the trade flows is that even Britain has a trade surplus with us on cars. And there really aren't many barriers to getting in there for us. It just indicates that, Detroit's got some real work to do with becoming more competitive.
Well, do these deals, I'm pretty sure there will be more deals, somewhat like the British trade deal. If there are more, will we get more trade in the future?
No, I think that if you impose a 10% tariff, you're going to have some more friction than you did before. My feeling is this can't be the template for Korea and Japan. Their trade surpluses with us on automobiles are too large. If it is, then this has all been a charade. There'll be no change in the trade flows in automobiles. My feeling is this is probably the template for the EU. Because I don't think that there's much hope of selling, Suburbans and any more Suburbans than we already do in Germany and France and so forth.
Okay. How's the Chinese economy doing? I ask because the trade talks really kick off tomorrow in Switzerland, fairly high-level talks. If the Chinese economy is not doing well, don't we have some leverage?
We have less leverage than you think. We've gotten our first month of export data from China, and their exports to the United States are way down, but their exports to ASEAN, to Europe, and so forth are up a lot. They've managed to find other places to send it. So, you see that information. And so their exports have actually grown last month. You see that information, and then you hear these stories of factories shutting down because they can't send stuff to the United States. Something's going on over there. They're finding additional capacity in other industries or something. But I don't think that we can really put the noose on the Chinese economy without cooperation from our friends. And one of the telling things yesterday about this agreement, as at least on the information they've given us, is there's precious little of that with regard to Great Britain. I mean, they're going to cooperate with us on export controls of critical technologies. So what's new on that? But there's nothing in there about them constraining their trade with China, and that's one of Bissent's big objectives, is, to encircle China. So without that, we don't win.
Let me get this in. President Trump says he would prefer not to raise taxes on anyone, but he's okay on taxing the rich if it helps him push through his big, beautiful bill. So what do you think about taxing the rich, Peter? You've got 30 seconds.
I think it's not a good idea. He's using it to finance other tax incentives, which are bad for the economy, like the exemption for tips and overtime and so forth. It's just going to create biases and prejudices and distortions in the labor market. Cutting corporate taxes isn't needed.
Okay, we hear you. Peter, thanks for joining us this morning.